Hey, it is Troy Stavros with Cornerstone Realty Associates here in Knoxville, and it is time for our monthly market update, looking at all the data through the end of August, seeing what has happened year over year compared to 1 year ago, and what's currently happening in the market here in East Tennessee and Knoxville in general. Let's jump in and start taking a look. Okay, let's take a look first at East Tennessee as a whole. So this is all of the surrounding counties in East Tennessee. When we look comparing August of 2024 to August of 2023, home sales are down 1.1%. Pending sales are up 13.9%. Inventory of homes, so that's the active inventory of homes on the market, is up 41.9% compared to a year ago. New listings are up 10.2%. And the median sales price is up 4.29% compared to a year ago, coming in at $365,000, with an average sold price per square foot in all of East Tennessee coming in at $219 per square foot. The absorption rate came in at 3.69 months worth of inventory. That is up from 3.63 months worth of inventory last month. So again, inventory is trending up. So when we see absorption rate rise, that means supply is increasing, demand is decreasing. So becoming a little bit more towards a buyer's market, definitely not a buyer's market because we still only have less than 4 months worth of inventory where a healthy market has closer to 6. But we are seeing that absorption rate increase. So you're seeing more flexibility in the market for buyers. They're able to get more choices in homes and probably better chance at negotiating a price that is lower than list price. Let's take a look at the numbers overall and some of the data here. When we look at the graph, we can see right here, this is the number of listings. We can see that it has just been increasing ever since February. It's been on a tear upward. So inventory has increased, and over the last month continued to increase. When we look at new listings, the new listings have held pretty flat. They came down, went back up, and then came back down over last month. This is pretty typical for this time of year. After we've gotten through the spring selling season, you tend to see less new listings come on the market, but that is starting to show itself here. When we look at pending listings had been coming down through June and then started coming back up and did go up last month as well. So more homes going under contract. When we look at sold listings, those have gone up slightly as well. We were increasing. This was a spring selling season. You can kind of see that here and this trajectory going up. Then we kind of hit the peak and then started coming down in June and then held pretty flat from June on through August. When we look at listing prices, those, again, the spring selling season, you can see what that did to prices. They shot up here, and then they've been holding steady here ever since May. When we look at the prices of new listings, those have held pretty flat ever since April. So they increased a little bit over the spring selling season, and then from April on, they have held pretty darn flat. You can see that there. Pending listings, those prices have been trending up. Spring selling season, they have trended up, then they held flat, and then they've kind of bounced around a little bit. But over the last month, they did trend higher. And then the sold median sale price, when we look at the sale price, again, spring selling season, that trended up. We hit June, and it held steady. And then over the last month, that sale price did come down there as well. And that's not untypical for this time of year. As we get out of the spring selling season and move towards more of the fall and winter months, you tend to see those prices come down as well. Again, absorption rate, like we said, had been trending higher and continues to trend higher. As this line goes up, it tells us that supply is increasing and demand is decreasing. So becoming more towards a neutral market for buyers and sellers. And that can be seen right here in the sold to list price ratio. We can see ever since May, that number has been trending down. So this means as this trends down, that tells us that more negotiation is happening because homes are selling for less and less and further below their list price. So here in the spring selling season, that was trending up. It was selling closer to list price, and list price being 100 on this scale. And then as it starts trending down, that tells us more negotiation is happening. Days on the market trended down during the spring selling season, but is now working its way back up as well. All right, let's take a look at Knoxville. So this is everything in the Knoxville market, everything with a Knoxville, Tennessee address. So home sales compared to a year ago are up 6%. Pending sales are up 14.6%. The inventory of homes compared to a year ago in Knoxville up 49.5%. New listings in Knoxville compared to a year ago are up 7.7%. But the median sales price compared to a year ago is actually down 1.26%. That's the first time we've seen that in a while. So that is something that we're going to keep an eye on and see what it looks like next month as well, to see if it continues to trend down or if it trends back up into positive territory. But as of August, the August median sales price was 1.26% lower than it was 1 year ago. And that came in at $385,000. And the average sold price per square foot in Knoxville through August was $226 per square foot was the average sold price. The absorption rate was up to 2.12 months worth of inventory. Last month, we were at 2.06, so we are seeing more inventory come on the market. We are seeing more supply, little less demand, so that is making the absorption rate increase in Knoxville. Let's jump over and take a look at the data lines here. So when we take a look at the active listings, again, this is very similar to what we saw in all of East Tennessee. It was flat, and then number of listings as of April just have been shooting up, more and more inventory coming on the market. And I want to preface that with saying not necessarily is all of this inventory coming on the market, but it could also be a combination of new listings coming on the market and existing inventory remaining on the market and taking longer to sell. So that's why it's piling up, plus adding new inventory on top of it, which is what's making this line increase. When we look at new listings, it's been pretty flat and actually went down over the last month. So those are starting to come down like we talked about earlier, not uncommon for this time of year. Pending listings have held pretty flat over the last few months. And sold listings, the number of sold listings also starting to come down as well. When we look at the prices, let's start with looking at the active median list price. It's been bouncing around, but did go up last month. But you can see that that's not something that's very consistent. It kind of bounces around. The new median list price also bouncing around, but it is at what appears to be a new high here over the last month. Held steady over the last month, but last month did hit a new high. When we look at the pending median list price, that also hit a high in May, came down in June, and has been working its way back up. And then the sold median list price has been coming down. So it had been rising over the spring selling season, hit a high in June, and has been coming down ever since. When we look again at the absorption rate, that again has been increasing ever since April, telling us more supply, less demand, more equilibrium between buyers and sellers. And again, over here, we can see ever since May, it has been a decline in the sold to list price ratio, telling us more and more negotiation is happening. Homes are selling for less than their list price. But that being said, remember that the hot homes may still sell for list price or above, but on average, it looks like more and more negotiation is happening in Knoxville. Also, did see an uptick last month in the days on the market. So as the spring selling season wanes, we hit July, and now we'll start to see things sit on the market a little bit longer as we get out of the spring selling season. Let's take a look at some other Knoxville information. When we look at this data here, when we look at the market action index, this line, this black line is 2024. If I just show you that line, you can kind of see that it has been trending down, meaning it's been getting less and less of a seller's market. And then this past week, you can see August 30th, it went from a 37.68 and it jumped all the way up to a 62.18. So that tells us something happened with supply and demand over the last week. Either a lot of homes were sold or a lot of inventory came off the market, which pushed it more into a seller's market than a buyer's market. So when we look down here at what happened with Knoxville inventory over the last week, because this data that we're looking at right now goes week to week, you can see there was a drop in inventory right here from August 30th to September 6th, because this data looks at every Friday. It ends every Friday. So there was definitely a drop in inventory. So it'll be interesting to see what happens with this line next week to see if it continues on a downtrend and maybe we've peaked for the year, or if this number comes back up and inventory continues to rise. So that's why we watch this week to week to keep an eye what is happening on the market immediately and not waiting for the monthly numbers to come in. As we look down here at new listings, we can see those pretty much held steady. There was a little bit of a jump last week, which doesn't correspond with this. So this is telling us maybe what is happening as we have gotten out of the spring selling season. Maybe there were some sellers whose homes didn't sell and they decided, I'm just pulling my house off the market. Because what we know about interest rates, most people that are selling their homes now probably have interest rates that are considerably lower than what is available right now. If someone has a 3% interest rate or a 4% interest rate, and they're not getting their home sold for what they want to sell it for, they might just pull it off the market now and try and bring it back on at another time. So that could be what's happening with inventory here, but we'll keep an eye on that and watch what happens. As we scroll down here further, we can see what's happened with the median price of active listings. It's held pretty steady, and we are below where we were in 2023. So active listings are less than what they were a year ago. When we look at price reductions, those have held pretty steady over time, and we are below where we were last year in price reduction. So right now, as of last week, 47% of the homes on the market in Knoxville have had a price reduction. Last year at this time, 52% had a price reduction, but that number is holding pretty steady, pretty close to 50%, or half of the homes on the market actively have had a price reduction. Let's jump over here and take a look at what is happening in general. So this side looks everything that's happened over the last 90 days. So you can see the median list price has trended higher. About 90 days ago, it was at $475,000. And it has trended up to $487,000. Price of new listings has held pretty flat. Price per square foot has held pretty flat over the last 90 days. You can see the median days on the market has definitely trended higher. 90 days ago, it was at 28, and now it's up to 42. So we were still towards the tail end of the spring selling season here. But over the last 90 days, that number has increased, and now it is definitely taking longer for homes to sell. Price decreases have also increased a little bit since July 26th. It's held pretty steady, but from May 24th to July, it definitely has been going up. So we're definitely seeing more homes having to take price reductions. Inventory, you can see that number has increased significantly over the last 90 days. Like we saw earlier, median rent has basically stayed steady, but the market action index has definitely been coming down over the last 90 days. As we come out of the spring selling season into the season that we're in now, it's becoming less and less of a seller's market, getting closer to an equilibrium where buyers and sellers are pretty much in the same place. Not a buyer's market, not as much of a seller's market, but pretty much neutral. When we look down here, As to what happened last week, we can kind of see the 4 segments. So this splits the market into 4 segments, 25 percentiles of the entire market as far as pricing goes. This lowest segment comes in at $289,900. In that segment, you can expect to get around 1,278 square feet in a house. You can expect to get a 3-bedroom, 2-bath home that's about 69 years old. And last week in this lowest segment, 56 new listings came on the market and 68 were absorbed. So that's telling us that there is still quite a bit of demand in that segment because more were absorbed than new listings came on the market. And in that segment, that segment is moving the fastest with 35 days on the market for the active listings in that segment. The next segment above that comes in at $419,900. In that segment, you can expect to get about 2,044 square feet, a 3-bedroom, 3-bath home that's about 31 years old. And in that segment, we saw 36 new listings come on the market and 59 get absorbed. So quite a few more absorbed than new listings came on the market. So still demand there as well. In that segment, the median days on the market is 42 days for those listings. Next segment above that, $575,000. You can expect to get around 2,663 square feet in the house, 4-bedroom, 3-bath home that's about 15 years old. In that segment, we saw 33 new listings come on the market last week, and we saw 54 get absorbed. And in that segment, 42 days on the market is the median. And then in the highest price segment, that comes in at an average of $939,500. In that high price segment, you can expect to get 3,509 square feet, 4-bedroom, 4-bath, a home that's around 12 years old. That segment saw 26 new listings come on the market last week, and it saw 23 listings get absorbed. So not as much demand in that segment, which also tells us why that segment has the most days on the market for active listings, coming in at 49 days on the market. But you can see here there is still demand in the market right now, which is telling us why prices really are not coming down. There is still plenty of demand and not as much new listings coming on the market. Let's jump over and take a quick peek over here and see what is happening as far as interest rates go. We had a good couple of weeks for interest rates. You can see this is the 30-year interest rate and what it has done over time. This is showing us this year. So we saw it bounce around. We saw it get all the way up to 7.5%, 7.51%. Then it started coming down. But look what's happened here in September. At the end of August, it shot up to 6.63, but ever since then, it has been working its way down. And then as of the 11th, that was yesterday, it got down to 6.11% for a 30-year mortgage. Bounced back up today to 6.15, but we are getting closer and closer to hopefully breaking below 6%. But right now, things are the best that they've been in a long time. I mean, you can see we go back. There's nothing on here, so it's probably early 2023 that rates were as low as they are now. So this is good news for buyers. Interest rates are low and trending lower, so now is a good time to jump in with a lower interest rate. Okay, let's take a look at what is happening in the surrounding counties. Compared to 1 year ago, in Roane County, available inventory is up 64.1%. Pending sales are up 21.5%. The median sales price in Roane County is down 2.52% compared to a year ago and coming in at $290,000. With the median sold price per square foot in Roane County coming in at $190 per square foot. In Knox County, the available inventory is up 51.8%. Pending sales are up 16.6% compared to a year ago. The median sales price in Knox County is up just 0.05%, so basically the same as it was a year ago, coming in at $385,000, with the median sold price per square foot in Knox County coming in at $225 per square foot. In Anderson County, the available inventory is up 73.3% compared to a year ago, quite a bit. Pending sales are down 1.2%, and the median sales price in Anderson County compared to a year ago is up a whopping 36% and coming in at $340,000, with the median sold price per square foot coming in at $213 per square foot in Anderson County. In Loudoun County, available inventory is up 64.6% compared to a year ago. Pending sales are up 25.6%, and the median sales price in Loudoun County is down 3.07% and coming in at $490,000, with the median sold price per square foot coming in at $241 per square foot in Loudoun County. In Sevier County, the available inventory is up 34.13%. Pending sales are down 34.77%, and the median sales price in Sevier County is down 7.70% compared to a year ago and coming in at $461,500. And the median sold price per square foot in Sevier County came in at $268 per square foot in August. In Blount County, the available inventory is up 53.6%. Pending sales were up 43.6% compared to a year ago, and the median sales price came in down 0.64%, coming in at $395,500, with the median sold price per square foot in Blount County coming in at $224 per square foot. So you can see here that 4 out of the 6 counties that we are looking at here came in down as far as the median sales price compared to where they were a year ago. So the median sales price was below where it was a year ago as of last month. So Roane County, Loudoun County, Sevier County, and Blount County all came in below where they were a year ago as far as median sales price. Knox County was not far from that. It was only 0.05 up, so basically even. Anderson County was the only one that was significantly higher than where it was a year ago. When we look at what happened last month on the card on the left, you can see 3 out of the 6 were below where they were a year ago. Last month, Loudoun County, Sevier County, and Blount County were all below where they were 1 year prior. But this month, in August, we added Roane County to that mix. So 4 of the 6 below where they were, something that we're going to want to keep an eye on and see what happens after the September numbers come in to see if any more of the counties go below where they were a year ago, or if we can rebound and bring those other counties back to a positive number as far as the median sales price. A few other things here. So this is the Zillow Market Heat Index, which tells us whether it's a buyer's market or a seller's market. When we look at this, it's showing the entire country. When you look at this index up here, the 25 number in the dark blue is telling you it's more of a buyer's market. The dark red is telling you it's more of a seller's market, and then kind of the purplish in between is kind of a neutral market. When we jump over here and we look at what's happening in Knoxville, you can see what it's been like over the last few years. So in 2020, we were at a 70, so we were deep into a seller's market. 2021, we were at a 72. 2022, we were at a 62, so still in a hot seller's market, but less hot than it was in 2020 and 2021. 2023, we're at a 62. Now, July of 2024, we were at a 48. So you can see that it is much more of a neutral market now than it was the last few years. So that's something to keep in mind if you are a seller. You can't be expecting your house to react on the market like it did the last few years, because it's not the same market. You can see from here, it was a much hotter market in 2020, 2021, 2022, and 2023 than it is right now. So you need to keep that in mind when you're listing your property, when you're pricing your property, and when you're negotiating with buyers. Something to keep in mind there. For a buyer's standpoint, looking for more inventory, yes, we are seeing more inventory come on the market. That is great. But this is showing us also that we are seeing new construction happening in the area as well. So when we look here in the Knoxville area, in 2024, we've had 2,836 new single-family permits issued so far in 2024. So that's telling us that there is building happening in Knoxville. And I'm sure if you've driven anywhere around town, you know that to be the case, with subdivisions still coming out of the ground and new homes being built. Okay, so hopefully that was informative. You're getting a good idea as to what is going on in the market. Now I just want to talk a little bit about some things that have happened in the market that you may or may not be aware of that happened since the last time I talked to you in my last market update video, which was in August. Now we are in September and some things have happened. I just want to talk to you about that because you may or may not be aware of them. So for agents and investors, there's been a lot of buzz around the new NAR, and NAR stands for National Association of Realtors, rules about agent commissions. Most of the general public hasn't heard about these changes. They don't really know how commissions are currently paid, and frankly, it's not something they're focused on. They just want to buy or sell a home and need help to make that happen. So over the last few weeks, I've spoken with dozens of new clients, and most haven't heard a thing about these changes. They shrug it off saying they'll pay whatever fees we agree upon, just like they always expected to. So what is happening? You might have heard whispers about shifts and how agents are compensated, but almost every article, blog, or forum post that I've read has been filled with misunderstandings about what's actually changing. So if you're unsure, here's the scoop. In terms of commissions, how much they are and who pays them, nothing is actually changing. That's right, as a seller, you might have been excited thinking you wouldn't have to pay a buyer's agent anymore. Guess what? You never had to. On the flip side, if you're a buyer, don't panic over rumors that you'll now need to pay your agent out of pocket. That's also not necessarily true, at least no more so than it was 5 years ago. The only thing really changing is how commission payments are disclosed to consumers. That's it. Previously, some less diligent agents misled buyers claiming they worked for free. Obviously, they weren't. It was just a dishonest way to attract clients. The truth is, there's always been confusion about how commissions work. The common narrative was that sellers paid both agents commissions, which isn't entirely accurate. What these changes are all about is making commission payments more transparent, so buyers and sellers know exactly where their money is going. So, what's changing for buyers and sellers? Well, for sellers, your agent should never have told you that you're required to pay a buyer's agent's commission. It's never been mandatory. You've always had options. You could offer to pay the buyer's agent a set amount if you want. You could ask the buyer's agent to make their compensation part of their client's offer, or you could offer no compensation at all. These choices have always been available, but sellers weren't always given the full picture. Previously, agents could see what compensation sellers were offering as it was stated in the MLS. Some would steer clients towards higher compensating listings, even though that's an ethical violation. Now, compensation information is no longer publicly available on MLS listings. Buyer's agents will have to call the listing agent to find out what the seller is offering, if anything. Now, for buyers, a few changes are on the way for you too. Buyer's agents now have to disclose how they'll be paid before showing any properties. You'll have to sign a form stating that you understand how they'll be compensated. If I want to show my mom a house, she has to sign the form first. That's the new rule. The way agents get paid isn't changing. You'll just be informed up front. So no need to start saving an extra 3% to pay your agent. Just like before, you can negotiate commission with your agent, or the seller may include compensation through their listing agent, or they could offer a concession to the buyer. There are options. You just need to talk to your agent about what those options are. So, how am I handling this? Honestly, I was surprised to learn this was a big issue in other states. In Tennessee, where I work, we've had similar disclosure requirements for years. Buyer representation agreements have always made it clear that if the seller doesn't pay us, the buyer will. In all my years and hundreds of transactions, not one client has ever complained. The only change for my team is that we'll be making the compensation disclosure before showing any property, as it's now required nationwide. But in Tennessee, we've always informed clients about their right to representation and discussed compensation. So this is just an extra step in that same conversation. So, final thoughts on this? A lot of agents are worried about how these changes will affect their business, and honestly, they should be. If they've been relying on getting leads from Zillow and opening doors for buyers, it's going to be tough to explain why clients should pay you. Personally, I'm excited. While I'm not a fan of extra paperwork, I think this will raise the bar in the industry. Agents who offer true value will thrive, and buyers and sellers will enjoy higher quality service. So don't expect prices to drop or for agents to work for free, but you can expect a more transparent and valuable experience from now on. Hopefully that helps explain. If not, feel free to reach out to me and ask any questions about this or anything related to Knoxville real estate. I am happy to help, and we are here to serve you. Have a great day. This is Troy Stavros with Cornerstone Realty Associates here in Knoxville.